Today's big news, homebuyer sentiment hits a record low. More on that in a minute. Hi everybody, Joe Hillner with your Home Sold Guaranteed Realty, where we guarantee you a cash offer on your home within 24 hours. Every week I share market data to keep you informed of the local real estate market. Here is this week's Boca Market Watch. First, single family homes. This past week, 59 new listings, pretty good, ranging in price from $450K to $11.25 million. 19 homes back on the market, while another 19 homes took a price decrease and 5 sellers raised their asking price. And another light week with just 42 different properties under contract and 28 going pending. 22 homes unsuccessful in selling and taken off the market or expired outright. And another decent week for sales with 64 homes closed in the past week, ranging from $380K to $7 million. Next up, condos and townhomes, 79 new listings, pretty good, and ranging from $90,000 to $15.5 million. 16 units back on the market, 16 properties with a price decrease, and 2 sellers with an increase. And another strong week with 45 different properties under contract and 60 going pending. Nice. And like the last couple of weeks, only 17 condos or townhomes unsuccessful in selling and taken off the market or expired. 90 closed sales this week. That's a good week. And ranging in price from $100K to $9.4 million. And here's what's making news right now. High home prices, increasing home loan rates, and economic uncertainty means that just 24% of shoppers believe it's a great time to purchase a home. Wow. The lowest reading ever recorded in a monthly survey conducted by Fannie Mae going back to 2010. Fannie Mae's most recent National Housing Survey, conducted last month, also found that 73% of Americans think the economy is off course, and that a survey high 25% of consumers anticipate that their financial situations will deteriorate over the next 12 months. That's pretty sobering. Obviously, if this consumer pessimism persists, the effects could ripple through the real estate markets and depress sales more seriously than recently forecast. In a March 10th forecast, Fannie Mae economists anticipated that home sales will dip by 4% this year to 6.6 million units, with a projected 12% growth in new home sales outweighed by an expected 6% drop in sales of existing homes. So flagging consumer sentiment along with the run-up in mortgage rates, up a full point in just the last month, will likely diminish mortgage demand from move-up buyers. And fewer move-up buyers means fewer available entry-level homes, adding to the already significant challenges for first-time home buyers. Fannie Mae's chief economist Mark Palem said in a statement, quote, "If consumer pessimism toward home buying conditions continues and the recent mortgage rate increases are sustained, then we expect to see an even greater cooling of the housing market than previously forecast," close quote. Could this be the beginning of the tip over into a buyer's market? So Fannie Mae's index, which depends on 6 survey questions, decreased to 73%, and it's down 8.5 points compared to the same time a year ago. That's significant. The reduction in the index was attributed to decreases in consumer sentiment about purchasing conditions, job loss concerns, home price outlook, and mortgage rate. Buyer sentiment improved in only 2 areas, selling conditions and change in family income. So while market conditions are seen as challenging for buyers, that's a good thing for those thinking to sell, survey respondents said, with 74% saying it's a good time to sell. No surprise there, right? I'm actually kind of surprised that number isn't higher, to be honest. The share of consumers who say the economy is on the wrong track rose 5 points in March to 73%. The share who say it is on the right track fell 3 points to 21%. And anecdotally, I hear that from people all the time, regardless of politics, about how we're just going on the wrong course. There's a lot of dissatisfaction out there, and I'm getting clients relocating from California, Michigan, and Nebraska, on top of the usual suspects from the Northeast. Only 4% of consumers surveyed in March expect mortgage rates would go down in the next 12 months. A thesis that's proved correct so far, with mortgage rates surging past 5% just this past week. And with 69% expecting mortgage rates to go up and 23% saying they'll stay the same, the net share of Americans who say mortgage rates will go down over the next 12 months decreased to just 4%. So it looks like the days of cheap money are behind us into the foreseeable future. While most consumers, about 57%, still think it would be easy to get a mortgage, the share of those who say it would be difficult increased 3 percentage points in March to 41%. As rates go up, it gets more difficult to qualify because the monthly payment may push one's debt-to-income ratio over the Fannie Mae or Freddie Mac limits. While most Americans don't think it's a good time to buy a home, 66% of those surveyed said that if they had to move, they would buy a home rather than rent. Interesting, huh? Well, that potential mortgage payment just got a little pricier. For example, if you're a first-time buyer looking to borrow $400,000, a month ago your payment would have been $1,796 a month. That same loan is now going to cost you $2,147, an increase of $351 a month. That's like another car payment. Ouch. So what's the takeaway? Consumer sentiment, as it coheses, can become a self-fulfilling prophecy, and that could have a significant and depressing effect on the real estate market. So if the buyer demand starts to dry up, the white-hot seller's market could evaporate right along with it. We'll just have to see how that plays out. Okay, so that's it for today. If you'd like some specific market data on your neighborhood, just give us a call at 954-799-6867. And if you're watching this on my YouTube channel and you like the information, don't forget to hit the like and subscribe buttons below. And don't forget to hit that notification bell icon so you get notified of any new market watches coming out. Till next time, this is Joe Hillner with your Home Sold Guaranteed Realty, signing off for now. Go serve big, everybody. Be nice to each other, and I'll see you next week.